But it does all come down to that TLT. And Scott Bauer, CEO of Prosper Trading Academy, thanks for joining us because you've been watching this TLT for a while and you have had a bearish view. Romaine was just noting the bearish action that we have seen in TLT in recent days and over the last couple of weeks. You've actually been putting your money where your mouth is about to be in put spreads. Talk to us about what you're seeing there.
Absolutely. And I thought that this rise up in rates and therefore, TLT coming down, it works inversely to where rates are, would actually have happened a few weeks ago, maybe even a month ago. And it really took until just after the Fed meeting last week for this thing to accelerate. So yes, Abigail, we are long put spreads here. And the TLT is a 20-year Treasury ETF, but is very closely aligned with the 10-year yield. And I really think that we're going to see a continuation to the downside here and a slow, gradual rise up in rates. This move that we had over the last, 3-4 trading days has been pretty dramatic. I think that tapers off a bit, but I do see the 10-year continuing to rise up above 150. When you look at TLT, the option volatility, the implied volatility is still really, really cheap. And TLT is coming down, I think Romaine had mentioned it, right to the 50-day moving average. If we see it break through there, which would correlate to probably 152 or so in the 10-year yield, if we see it break through there, I think that's where volatility really, really picks up.
So something that makes this really interesting, Scott, and Romaine was really getting at this also, is the idea that TLT breaking down, that should be bullish. That should be risk on for the markets, investors not looking for haven bonds. On the other hand, because it does mean that rates would be rising and there's that very fine line between reflation and inflation, especially if the 10-year yield at some point goes closer to 2% or above. What are the options markets, the VIX, the VXN, the RVX, telling you in terms of how investors are seeing this? Do they like rates rising and bonds selling off, or is there some of that inflationary scare?
No, I think they're complacent with it. Let's put it that way. Otherwise, we would have seen, a VIX stay in the mid-20 range that we saw it spike up to last week. So I think where it is right now, the VIX, 18, 19 handle, it is more complacency than anything else. Really can't make up its mind. Are we going to get back down to 14, 15, 16? I don't see that happening anytime soon. I think there's just too much pressure geopolitically, economically. I think there's too much pressure. However, sustaining, in the mid-20s, that's real tough. So I think the VIX, what that tells us, again, that's the fear index sentiment out there, is that kind of likes where the market is right now and that we can handle rates gradually going higher. If we see the 10-year approach 175, 180, that's probably a very big trouble spot. But until then, as long as it's just a gradual move here, Abigail, I think the market likes it.
Yeah, that's pretty interesting, only from the standpoint that a lot of times when sell-offs for stocks happen, they take people by surprise. So you're saying complacency there, and if yields do rise, it could suggest that the sell-off that we're seeing in big tech today, it may gain some steam at some point. Scott Bauer of Prosper Trading Academy, thanks so much for joining us for Options Insight. Taylor, back to you.